Hey, it's Michelle Ellis, your local world-class realtor. I am here with Ryan Reckenberg from Allstate. We are starting an insurance series of education for the right information, maybe not just what you think about insurance, but the actual valid, correct information. And so we are going to start this series about auto insurance, and we're going to cover liability and collision and comprehensive. Ryan, if you want to just take a moment to introduce yourself, and then we'll get right into the information.
Absolutely. So my name is Ryan Reckenberg. I'm one of the local agents here for Belleville for Allstate. I've been in insurance for 2 years with Allstate, 5 years before that as well. I came out of commercial real estate originally. And yeah, correct information is always the best information to get out to people. So that's I strongly stand behind that sentence, Michelle.
And I
Now,
think that's important
do you
too.
want me to just jump Do you want me
Yeah.
to just jump in and kind of tell the people? Okay. So essentially the way I see it and the way it's always been described is that there's three silos, if you're thinking like grain silos of coverage for personal vehicle or for any auto insurance. So you have the liability, which if you're thinking about it, best way to imagine it is that's any damage that is done to a vehicle or person that's not yours. And then comprehensive is damage that is done that doesn't fit under the category of collision. And then you have the big one of collision, which protects you and your property. So if you've hit another vehicle and you've done damage to the person and to the vehicle, liability. If it's your vehicle, collision. If an animal or an object hits you, if there's theft, fire, vandalism, all of that would fall under comprehensive. So you get a lot of people who say, I just want fire coverage or I just want the fire and theft. What they're saying essentially is I just want comprehensive. And it can get very confusing because there's different coverages for each thing. And in a lot of cases it's overly convoluted and overly complicated for what the general person needs to know, but that's essentially what you'd be looking at is a comprehensive in that case. So
So I have a quick
easiest
question.
way. Yeah.
So if I have a vehicle that I own sitting in the driveway that's not being used, fire and theft, is that something like I'm not going to be driving it, it's just literally sitting in the driveway? What kind of coverage would you suggest?
That is a good question because there's two ways to ensure that. The first one would be keeping the comprehensive on it. Problem for most people is it's overly expensive. It's an over coverage in that situation. So what I would personally do is put something called an OPCF 16, which is a suspension of all coverage except for things as it sits. So it has to be 45 days or longer sitting. So if you're not going to use the vehicle, you'd park it there and then you'd cover it under an OPCF 16. And it would essentially make the price of the policy somewhere between a half and a quarter. So that's
Right.
the cheapest and better way to do it.
Yeah, because I know that there are
And
lots of
so
people, like we have an extra vehicle that we have as well, and I'm like, well, we might as well keep it for our son. Like he's going to be 16 sooner rather than later, so I'm like, we'll just keep it. But do we have to keep coverage on it? That was kind of where that question sparked from.
yeah, and what you would do, and a lot of people are in that situation, or they have a winter beater that they take off the road, or a summer driver that they keep on the road. What I suggest doing is just a quick, simple sign of a form, and you can suspend the coverage as long as you're not going to be using it for that 45-day period or longer. And it's the better way, the more economical way to do it with the same coverages. So absolutely.
So I
And you
have
were
another
saying for
question.
auto. Yeah, yeah.
Yes. So does is So I know recreational vehicles are totally different. So when you said the 45-day situation, it sparked a question for me personally because we insure a sled, snowmobile, and obviously in the summer we do not ride it. So would something like that be an option, or do they know that it's a recreational seasonal vehicle and therefore you have to, have coverage all year long?
For ATVs, for snowmobiles, even for like motorcycles, they're already done on like a year-round basis, and so they actually charge more during the usage months than they do on the off months. But they'll give you they've already worked that into the rate, so they just say keep it on, and it won't make a difference because it's already been rated for in most
Right.
situations.
That
So
makes sense.
some companies, yeah, some companies for their motorcycles and stuff will sell a seasonal policy. Most of them don't even bother because it'll be the same amount of premium, like same amount of cost to the person if they do it on a yearly policy. So
Right.
it's not
Right.
going to save you what you think you would.
So,
So that's where that would come from.
I know I'm shooting a whole bunch of questions at you and you haven't even finished what you're talking about.
That's okay.
Um,
That's why I'm here.
Leased and rental vehicles, insurance wise, would they is rental insurance covered with your normal insurance coverage? Like, so for example, when I travel, out of
I
country or go ahead.
yeah. So if you're there's two different ways to think about it. There's one rental coverage that is if you're in an accident with your own car or it goes to the shop, the insurance company would pay for you to have a rental for the period while it's gone. That's one type of coverage. The one that you're talking about where you're going overseas, again, it has a fancy number in a title. It's an OPCF 27, and it will cover you anywhere in North America for a rental. They don't cover international. So like if you're going to the UK, if you're covering anywhere, take the rental coverage from the company. Like that would be my recommendation for any one of my clients, any of my family members. Take the rental coverage from the company.
Right.
If it's within North America, and I mean that's counting tiny little places. Like we're talking like Bonaire, Aruba, any of the islands as well as Mexico, like the anywhere in the US and Canada. It's OPCF 27. So if you rent a lot of vehicles or if you're a business person who travels quite a bit and gets rentals, OPCF 27 is your best friend because I worked it out mathematically one day. 4 trips over 3 days would pay like it would come out beneficial to you. So if you're traveling 3 4 times and or one time and it's a long time, like a lot of snowbirds, and you're renting a vehicle if you're down there, that would be what you would do.
And that would be
OPCF
incorporated
27.
and that would be incorporated in your normal coverage, or would that be an add-on that you would get?
That would be an add-on. It's not a difficult add-on. It's usually about $15 to $18 for a year. It's just knowing that that coverage exists and
Yes.
knowing that it's something you need to do.
That is
Yeah.
huge.
So
That
you
is
go
the
to you
biggest
go to the rental company and they say, I'll give you the coverage for it. So and a lot of people also have the coverage and they don't even think about it on a lot of the credit cards offer rental coverage as well. So just know what you have, kind of look at it and think about it. And the coverage that you'd be getting from like an auto insurer, like whether it's RBC, Wawanesa, us, is the stronger coverage than like a card or versus like the rental company, but they all do the same job overall.
right, and
So
so did you say it was
that if
$18
you
a
want me
year?
to fire another, it can be around there. That's the average. Yeah,
Wow.
it's not expensive at all. I think the
That's
highest I've ever
every
seen it
realtor out there needs to know
is
that, and business owner.
I I think I've seen the highest one I've ever seen was $48 a year, which works out to about $2. Like
Wow.
over if you're $2 to $3. Yeah. So
Wow.
the other interesting thing that's come down the pipelines recently, like from the Ontario government, was this is your piece of news for today, was they said they were trying to fight against rising prices for insurance. And one of the things they've decided to do and make optional is under your liability, you have something called DCPD, which means direct, yeah, they're all fancy acronyms. It's direct compensation and property damage. They're going to give drivers the option to opt out of the coverage for their insurance for a savings. That's the concept. And it's a good idea until you really delve down and you know what it is and what they're talking about. DCPD is essentially the coverage overall that pays damage to other people. So essentially, the main part of why people want the insurance is to protect themselves in the case they're in an accident and they have to pay damage to other people, whether it's their vehicles or whether it's medical.
Hmm.
DCPD is that coverage. And so they're saying, we'll let you get rid of this coverage for the savings on your insurance, but that's the main purpose. So I like it boggled my mind when I heard what the solution was. And it's just been announced, and I couldn't believe what I had heard when they and most people who hear that think savings on insurance, that would be great. Can I opt out of this? And it's going to be a lot of conversations about no, it's a terrible idea. That's why we're here. It's
Yeah, yeah.
and
Yeah, because people will always wanna cut corners and cut costs, right? But really that's what protects you, it seems like, right? And the other people?
exactly. And there's cutting costs and there's cutting the fat and trying to be streamlined with your coverage, but then there's being intelligent about it and knowing what coverage you should really rely on. And I get a lot of the phone calls and a lot of the things after the accidents have occurred. What's happening is they panic about all of the coverage and do they have enough coverage? If you opt out of something like that, all of the responsibility would then fall on the driver. And in most circumstances, like even with a $2 million liability, in a lot of situations, if you cut down your liability, because you can decrease just your overall general liability to like a lot of the discount insurers are having like $1 million or like $500,000 coverage. What they don't explain is anything above that value. So if you hit somebody and you injure somebody and destroy their car, and it happens to be a Tesla or it happens to be like a big truck that has a high value, you're on the hook for anything above the value. So if you have a 500,000 or even $1 million liability coverage, and the damage that you're held responsible for is 1.5 or 1.6 million dollars, you're then on the hook for that $600,000 personally. So
Yikes.
it's having that coverage to make sure that you feel comfortable, which is why whenever I talk to my clients, I always emphasize you should really top out the liability. It's the most important. It's kind of the apex of that pyramid of coverages. If you have an older vehicle or like a vehicle that you're buying off Craigslist or off wherever used car dealer on the cheap for winter, it's a whole different ballgame. It's a do you even want collision on it? I would never recommend taking liability off, which is what the government's deciding you may have the ability to do. And it's the one coverage I would never drive without. So
Yeah.
that's pretty
Well,
much a pyramid. At the top, you have the liability, and then comprehensive and collision at the bottom, just kind of holding it up.
right, right. Now Is that so is the insurance the same across all of Ontario? So can you help people throughout Ontario, or is it just this local area?
Each each province has its own. So when you're going into a real or into a an insurance office, no matter what company it is, we're all licensed. So that's the first thing to know. Just like financial advisors, we have boards, we have education we have to do. So once you have the education, like I can write policies anywhere in Ontario. It's easy enough to get the different provinces, but they will not allow you to hold more than two. So if it's
Right,
Ontario and Quebec or Ontario and wherever, there is a limitation on how many you can hold.
right,
There is no Canada-wide certification or anything, so you're basically bound to the province that you write.
which makes sense.
It's easiest way to think of that one. No,
Yep,
it's it is Ontario-wide, and the province itself makes all of the rules. We have a governing board. It's called FISRA. They control all of the auto rates actually. So each insurer is responsible to them to go and say it's highly regulated. So they'll say we need to increase our rates by 1% or by 0.5%. And then the province is the one who makes that judgment and says, yes, you can, no, you can't, which is why they control the price of insurance. It's less the companies being able to do it, and all of the coverages are standardized as one for they have been for decades now. So
right. Well, it's good
that's
to
a good
know
one too.
because people need to know that, who they're working with is professional and is legit.
Oh, absolutely. And it's there's no wild west in insurance where we're all playing on, especially in auto, playing on essentially a level playing field. It's just some companies are known for their claims and their customer service like ours. Well, when he says known more for like their commercial and for high-end vehicles, like each one has like a special niche that they can focus on,
Right,
and it makes it both interesting and competitive at the same time.
for sure. Now when a family has multiple vehicles, is that something that you guys bundle together, or is that something that each vehicle has their own individual coverage? How does that work?
For our company, there's different companies that do it different ways, and it depends on the drivers. There's a lot of riders on it because one may be like judged at risk if there's multiple accidents or some kind of situation. If they're high risk, then we have to sever it between two companies, and one will hold like the high risk, and then the other one will hold the rest of them. But in most cases, and in with most companies, ours included, the more vehicles that we have on a policy, the higher the discount, because the more vehicles that we're insuring for a household, it's just easier for us to keep track of. It's easier for us to insure. And it's the same thing. We also will bundle if you bring your house insurance and your auto insurance together, the savings is somewhere around 25% overall. Like just to give like an example, it's not a hard and fast rule, but that's when you bundle stuff together, it makes it a lot easier and the underwriters like it more because all of it is in one place. So
Yeah, that makes total
instead of
sense.
diversifying the risk, they're kind of solidifying it.
Right.
So a lot of companies do bundles and so it's just if there's a high risk person and there's talking about the high risk part, there's it would be an interesting show as well because there's buckets of high risk drivers. So you have people who are like moderately high risk, and then there's people who you can have an Ontario wide, and all of our insurance companies pay into it. And that, so because we're in a province that anyone who wants auto insurance legally has to be able to get auto insurance. Just that's the law that they passed. And
Right.
because of that, everybody then has to have, and there's some risks that we don't want to have because they're high risk, they have multiple issues. So there's actually a conglomerate of all the insurance companies that put money together into a couple of companies, and they all share the risk for all of the high risk drivers. So there'll be 10 or 15 insurance companies all covering one at risk driver because they know that they have to insure it, but they kind of don't want to. So
Right.
it's a way to ensure that the risk is spread evenly.
For sure. Well, that's good. Yeah, bundling. I know personally we do not have our stuff bundled. We have it kind of spread all over the damn place. So maybe we need to talk when it comes to it and figure that out. Because yeah, if you can save, I mean,
You can always give me a
all right. Well, after
call.
this
I'm
call, maybe we'll
always
try.
available.
So yeah. So
But
is there anything else you wanted to add?
in terms of comprehensive, if you want kind of some really interesting ones. So for comprehensive, most of the coverage that we do see under there is vandalism, theft, and fire. But there's interesting ones. It also will cover things like animal hits. So if you hit a deer, if you hit like a wild turkey driving along Highway 2, past some of the farms, that would be comprehensive. But if something falls off someone's car, hits the road first, and then hits your vehicle, that's a comprehensive claim. But if something like a side mirror falls off someone's vehicle, comes straight back and hits your car, then it's collision. And it's kind of knowing little, really tiny details that happen like that. And when we do a house one, I have some really interesting house claim ones that have come across my desk, and it's been argued about over and over and over and over. And we have these conversations where it's just hours of conversation. And it's not very interesting to some people, but it's fascinating and it's vital to know what
Oh,
is and
for sure.
isn't covered every day.
Yeah, absolutely. Um,
But
are there
other
any
than that,
are there any myths or anything that you think, that some people have about auto insurance that you need to bust?
well, I have a couple of scary facts, and I don't know about myths. One of the myths, I suppose, is people say like there are people who can't get insurance in Ontario, and that's as I covered before. That's an absolute myth because anybody will be able to get insurance in Ontario. It may not be affordable in some situations, but it's always insurable. Now, one of the scary facts that I came across was something like 18% of drivers in the US and in Canada drive without insurance.
That's
And
pretty high.
that is a scary fact to think. And under your liability, like under when we were talking about getting rid of that DCPD, there's a subcategory on all Ontario policies where you have a special rider to every single policy that's for underinsured and uninsured drivers. So if you're in an accident, it will cover your vehicle if the other person's driving without insurance because it's such a common occurrence now. And it's partially cost, but at the same time, the other part of the issue is sometimes people don't think it's worth their time to protect what they have, and I don't understand it, and I'll argue to the end of the earth that you should really be protecting what you own, no matter if it's your house, your car, your trailer, whatever it is.
Right. Yeah, absolutely. All right. So, I
Eighteen
think on the
percent.
next 18%, yeah, that's super high. That's crazy. All right, so we'll wrap up this session on auto coverage. I think, I forget what's next week. Home insurance? I think we're gonna talk about home insurance.
I do believe so.
Yeah, so we'll talk about home insurance on the next one. But if you guys have any questions whatsoever, please comment below. We will make sure that your questions get answered. And Ryan, how can people reach you?
You can either come into my office. I am there sometimes in Belleville, and at the Allstate office at 365 North Front, or you can call my office. I'll put my number in the comments below. I'll also put the address so people can find me there.
Perfect. Awesome. Well, thank you, Ryan, so much. And we'll see you on the next one.